Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
ASX 200 and the Nikkei, the Japanese index, that's managing to hold on to decent gains of more than 0.5% in today's trading session.
The levels, of course, upside level, 24,546 is where we are at.
They want to rebalance. Let's do it together.
50 points lower on the Nifty, so 24,288 is where we are at. The Nifty Bank is down about 0.3%, 55,184.
We will have to wait and see whether the slowdown is shallow or deep, whether it becomes a full-blown recession.
Identifying places, locations in the country where it is safe to put such large or modular nuclear reactors.
After 7 good days on the trot where the markets were running higher and higher, today is a session of consolidation.
If you could also just touch upon the margins bit that I was talking about, how do we look at the margins?
Track and punish every terrorist.
Multiple options are being discussed. There are meetings of intelligence chiefs taking place.
Well, the markets are trading with a cut of close to around 70 points or thereabouts.
Well, it is a bit of a down day, as we've been seeing for the last many hours. Actually, a little sideways to be expected, as we've been highlighting as well. This is closing bell, and that was the day so far. So neither here nor there, actually. I mean, all told, we've had a very, very good run. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleague Surabhi and Nigel. Guys, hi, afternoon.
Hi, good afternoon, folks. But I guess, I was looking at the banks because yesterday the banks were sitting out of the action. This morning, the Bank Nifty started lower.
Yeah.
They've recovered and, maybe this is just a pause for the market.
Well, that's right. And the breadth of the market is still having a number of stocks advancing more than the number of stocks declining. So that's pretty good going.
No, absolutely. And we're not, it's not as if the market's broken any supports. Actually, we're not even close to any supports in that sense. And that's natural because the gaps have been so large and the moves have been so large. So the closest, even the hourly averages, and that's the nearest support for both the Nifty and the Nifty Bank, is further down. So for the Nifty, we are at 24,247. And here the support is the first 40 hourly exponential, which we put out in the morning, is 23,865. So that is some distance away. And similarly for the Nifty Bank, the first kind of hourly support is 54,390. And let's just quickly take a look at where we are, 55,380. Is where we are at here as well. So again, on both indices, we are about 1.5% away from, just getting to their hourly averages even. So a bit of a sideways kind of consolidation kind of a day. But as Nigel said, broader market is having no such problems really coming through. That's the market breadth. Actually, market breadth also is not all that bad. It's kind of even Stevens. This morning, we started with a bulk of it in the red, but I think things have improved a little bit, at least if you look at what's happening right now. Surabhi.
I'm looking at global markets, and for the time being, what's quite visible is that US futures are sulking. In fact, they've actually turned decidedly lower. If I'm looking at the right screen, the S&P futures are now down 1%, NASDAQ futures are down about 1%. So that whole cheer that we had because of the expected climb down from Mr. Donald Trump, that I think is fizzling out, at least going by markets right now. And even across Asia and Europe, we're seeing more muted cues come through. So that seems to be weighing on sentiment here as well. Anyway, to talk about some more individual movers and shakers, today IndusInd Bank is quite the outlier. Those are some of the European markets, like I was saying, they're all muted. US futures are down, global markets are down. But over here, some stocks which are outliers. IndusInd Bank is definitely one. Cement stocks are seeing some interesting buying. Ultratech is notching up gains of about 1.5%, trying to buck the trend. And like I was saying, banks are trying to come back. And it seems that with banks, it's a buy on dips kind of a thesis that the market has gotten into. So Axis Bank, Axis also, of course, reporting numbers today. Kotak Mahindra Bank, these are stocks that are clocking some green at this point in time. Just a quick word on consumer. Let's talk about the consumer stock reactions. Then we'll, of course, do the analysis. Lever down 3 to 4%. really no sign of growth, cautious about the sort of upcoming trajectory, concern on margins. That's playing out on the stock. Tata Consumer has recovered from the morning blows. Tata Consumer managed a little bit of green for itself. And Nestle reported 2% volume growth. The expectation was 2 to 3%. They reported 2%. Lackluster performance there on the stock. So lots of consumer names. We'll get you more details and more analysis with Maglam in just a bit. Nigel?
Well, that's right. And we have ACC's numbers that are up for you on the screen. Remember, for ACC, it's a little bit confusing because they have a master supply agreement with Ambuja Cement. So they, there's a lot of interchangeability between them. But first, look at that. These numbers actually look good. On the top line itself, there's a beat. The margins have shown a big beat as well. So to tell you why the margin number actually is looking better than what the street is working with is because of a couple of factors. One is the top line growth is better. So in all probability, they've got some benefit of operating leverage as well. That's played out over there. And the other factor is the power and fuel costs. When you have a top line growth of close to around 12%, but your power and fuel costs have come down by close to around 11%, that's telling you that that's the clincher actually. And that's why, in fact, you are seeing that the EBITDA number as well is a little bit better than what we're working with. So we'll get you further details on that front. But I think the commentary that came in from Dalmia Bharat as well earlier today with regard to pricing, they were sounding a little bit optimistic and those numbers weren't too bad. So I guess that's played out as well. But let's get in, let's get in Mitesh Thakkar to help us out with what's the trade. Hi, Mitesh. Good afternoon. And tell us, how do you read today's trading action and a couple of stock picks as well?
So, Nigel, I think, the process of consolidation appears to have begun. We've been kind of sideways the entire day, and we've not been able to get past the yesterday's high, neither we have broken yesterday's low. So, looks like, I think, the markets will settle down for a few days, maybe, 1, 2, 3 sessions, maximum 4. That's difficult to say, but for the time being, the idea is that the directional bias is on the upside. So, within this consolidation, you're likely to get some intraday declines and pullbacks. I think those would be very welcome buying opportunities. So for the Nifty, anything closer to about 24,050, 60 is the area to start buying. So roughly about 170, 180 to about 200 points lower from here. And as long as that gap which happened on the Monday, which is at about 23,872, I think that doesn't get filled. I think stay positive and buy a bit at about 24,050, add more if you get slightly lower levels. So that's the way to approach the markets in the near term. On the stock side, I have a buy on Tata Motors, keep a stop below levels of 659, look for targets of 695 to begin with. And also a buy on Nykaa, which is something which I've liked for many days now. Nykaa is a buy with a stop at 192 for targets of 202.
Okay. All right. Got that point. Mitesh, thanks very much for the stock calls. We'll come back to you a little later with more questions. Let's get down to specific movers and shakers in this afternoon's trade. And Divi's is one such stock. Last I checked, Divi's was up almost 4 to 5%. And this is on the back of excitement building in the market on the GLP-1 opportunity, the fat loss drug, so to speak. So Divi's could perhaps be an important vendor in the supply chain. That at least is going as per a Citi note. But let's bring in Vinny to understand this better. Vinny, what exactly is Citi saying?
Absolutely. So, the main crux behind Citi's note is that Divi's would be the possible primary supplier. So on the back of this one, firstly, they've given a buy rating to Divi's. They've increased the target price to 7,050 rupees per share. Previous target price was 6,850 rupees. Now, recently, we had seen that LLD study on this oral GLP-1 drug. That was a positive sign that came in there, positive commentary that came in on that front. And that is why Citi said that now seems like Divi's is well placed actually to capture the opportunity that could come in for this oral drug, the GLP-1 drug, which we're talking about. Now, why? Divi's has a lot of capacity that is there in GLP-1. Currently, when you look at it, they have around 300 million tons of capacity. They've planned more intermediary capacities already. Proposed capacity addition of 18 million tons. Capacity addition also for peptide GLP-1 specifically as well. So they have a lot of capacity which is just lying right now, mainly to capture on this GLP-1 opportunity. So at the minute we'll see, LILD actually getting the positive signs for this oral drug. They believe that Divi's would be the primary supplier, would get an orders on that front as well. And on the back of this, they're estimating around a $800 million plus GLP-1 opportunity for Divi's by by 2030 is the estimation coming in from DVs. So that's why a positive note, and that's why we're seeing DVs buzzing in trade on the back of this.
Okay. All right. Got it, Vinny. Thank you very much for that. So lots of pharma companies in the news. Yesterday it was Lupin. Today it's Divi's on this possible opportunity. 5% up on the stock. Deven is joining in. Deven Choksi, MD at DR Choksi FinServe. Deven, always a pleasure having you on the show. Thanks for being with us. So that's exactly what I was saying, right? Some specific pharma companies, because of individual drug opportunities, seem to be in focus. Let's talk about Divi's and then also Lupin, in case you had a chance to look at the excitement around their kidney drug, the one for which they are about to get exclusivity.
Yes, very good afternoon. Well, I think for DVs, definitely, I think it's all falling in line as far as I think their earlier preparation, including the capacity expansion and the approvals, I think, which are all now falling in place. And as a result of which, I think one after another positive news have been taking in. Though I fully agree that this particular part of the launch of the drug could possibly be, I think, over the next 3 to 5 years' time and not immediately. But yes, the market would definitely factor in all the possibilities, I think, from starting itself. So certainly, I think the stock remains interestingly positioned. In between, during the corrections in the price, I think the stock was available at a valuation which was also quite attractive. Maybe currently, I think, slightly improved valuation, I would say, as a result of which I think maybe one will want to buy in a falling market. But looks good from the long-term investment perspective, in my understanding.
Deven, anything on Natco as well, which you're picking up? Big move today.
Not sure, Prashant, I think on that front, I think we need to look into.
Okay, I mean, Natco, I think, is a... By the way, it's a number one volume-led gainer right now across the board, which is phenomenal. The other one, of course, is Sami Hotels, right? I mean, I think we have the sound bites with us, and maybe we can just play that out for our viewers. We spoke with the management in the morning, so they've got an anchor investor in the form of GIC, which has picked up a stake in. They've invested in 3 subsidiaries, so it's going to be investing in, through these 3 subsidiaries, a total of 5 hotels for now, but the agreement calls for GIC to sort of jointly come in at the upper scale sort of hotels, future hotels, etc., which Sami will sort of acquire, build, etc. as well. So it's a long-term partnership, apart from, of course, what this current infusion of cash will do in terms of reducing the debt, etc. Listen into the management, and we'll go across to Deven.
So I don't think I like to belittle the whole transaction by just only focusing on leverage. Clearly, that's a great end result. But what this gives us is a strong partner for future growth, especially in the upscale and higher category of hotels. As you've mentioned, we have picked up 3 of our existing hotels where GIC has picked up 35% stake against a total investment of 752 crores. This does multiple things. It reduces our debt significantly, on closing. That frees up a lot of our free cash for future growth. And in addition, GIC and Sami are committed to growing this whole partnership to about $300 million. So we do expect both partners to put more capital for future growth in this business. In terms of timing, the deal is subject to customary approvals such as shareholders' consent. We believe this should be in place by end of May. And majority of the investment comes upfront, which should get done, I would think, by June end. And the balance comes in Bangalore asset over the next 2 years. So besides the 3 seed assets, both the partners will look at new opportunities on an asset-by-asset basis. And if both the partners like the opportunity, we are committed to bring in capital in the ratio of 65-35, 65 from Sami and 35 from GIC. Closing, the net debt will come down to about 1,460 crores. Interestingly, that absolute number helps us achieve a target of near-term going below 3.5, within a year going below 3 times, and fairly quickly getting to our stable target of 2.5 times net debt to EBITDA. Therefore, we can look at deploying a lot of our free cash towards growth. But we believe our net debt will remain in the zip code of 1,000 crores to 1,400 crores over the next 2 years.
Okay, well, those are some sound bites from Sami Hotels. Deven, I don't know if you have a view on the stock transaction GIC coming in?
Yeah, Prashant, I think about 4,800 keys that this particular company has, and also meaningful tab with likes of Marriott and Indian Hotel Groups, among others. So that way, I think the total asset management or the portfolios of the real estate that they are managing, along with the partners, I think that's something which is interesting. Not completely sure about the financial numbers this point of time, but I think the entire sector as a whole looks, I think, quite promising. When you look at ITC hotels, when you look at Indian hotels, on even some of the names like Pravik, in the entire hospitality space, I think these companies are showing some robust growth. And no wonder, because of, I think, higher amount of spending by the customers across, either in the spiritual locations or the tourism, or even in the leisure tourism space. I think everywhere, probably, I think you're seeing higher amount of growth apart from business tourism.
Devin, two bank stocks for you. One, IndusInd. I don't know, I mean, whether today IndusInd is just seeing some buying on a valuation basis, right? For those who are happy to take on a little more risk. We all know that it is one of the cheapest large cap banking stocks out there. So your thoughts on IndusInd. And the other is Axis. Great numbers from HDFC and ICICI. What about Axis now, and what's your view on the stock?
So we are distinctly positive, Surabhi, about the entire space and have been vocal about it, that the larger the size of the AUM, the higher the amount of deposit base. I think you are having the biggest advantage today in this situation because the growth rate is sticking into the economy. And the numbers are only validation. The HDFC Bank and the ICICI Bank numbers are only validation. Even, I think, the other ones which are there in the larger NBFC space, they have been reporting on a monthly basis larger growth on the AUM as well, including Bajaj Finance. So we remain, I think, distinctly confident about the growth prospects for most of the banking companies. Fortunately, they are not too expensive even after the current rally in the stock prices. They promises to be relatively performing relatively better compared to others among the banking space and NBFC space as well. Coming to IndusInd Bank, probably in my understanding, I think most of the fund investors are supporting the stock by their buying and accumulating the stock in the portfolio, also to ensure that the NAV will not fall. But more importantly, I think the negative news are getting priced into. And as a result of which, I think the valuation probably discounts most of the adverse news which probably one is seeing. Not too sure, again, I think whether to buy into the portfolio immediately, vis-a-vis some of the better names which are promising to do relatively better in the business at this point of time.
Correct. All right. Devin, I wanted to ask you, what about ACC and Dalmia? Now, both those two have reported pretty okay set of numbers. And as we know that now we're optimistic that FY26 will be far better than FY25. No big general elections. I think the first state election is only in the second half of the year. Prices finally, after many, many quarters, are showing some bit of an uptick. What do you like out here?
And I guess I think the important point for Dalmia in particular, that they are in the process of passing over the cost, I think, which is basically incurred by them on the limestone tax by Tamil Nadu government. And then exposure to those limestones, I think, close to, 25% in that state itself. So they are saying that they will be passing it over that particular cost to the customer, which means that the demand side scenario remains upbeat and bullish, which is a fact validated across the country, the construction activities which are taking place on infrastructure side as well as on the industry side that we are seeing apart from real estate. So all in all, put together, the demand scenario remain upbeat. On the other side, the input cost, the energy cost is coming under control because of the lower crude oil prices. And that's where I think one is arguing that on a higher capacity utilization, you are having lower cost of production, which will probably a win-win combination as far as I think the growth in the business and the profits along with. So certainly I think some of the cement companies expected to do well. And typically this quarter, April to June quarter, is supposedly the best quarter that one would be experiencing for most of these companies. We like the pan-India plays of Ultratech and ACC and Ambuja combined, though I think some of the mid-tier cement companies are showing up signs of higher amount of growth because of the recent additions in capacity. Sector remains a little more favorable now.
All right. Devin, just throwing this to you. Not sure if you have a view, but, VIP Industries has been a big disappointment in comparison to what Safari is doing. But some channel checks indicate that for the industry, not for the company specifically, but for the industry itself, demand is better at the start of this quarter in comparison to quarter 4. Given the valuations, what's your view on VIP?
I haven't looked at the valuation per se at this point of time, but in general, I think the entire segment looks, relatively better, largely because of the fact that I think they're getting the tailwind of the entire tourism activity, traveling activity is taking place in the country. But beyond that, I think on the valuation front, I'm not fully comfortable to talk at this point of time since I have not looked into it.
Okay. All right, Devin, we'll leave it on that note. Thank you very much for joining in. Good to have you on this afternoon, as always. We need to take a very quick break on that note. Come back on the other side. We'll keep tracking the markets and get you more perspective. Pramod Gobi from Marcellus Investment Managers will join in. Welcome back. Quiet afternoon of trade, and the Nifty is still tracking a cut of around 90 points now. So it's a very slow drift down at this point in time. Let's talk about the consumer earnings that came through. Lever as well as Nestle. Lever is still down about 4%. Nestle is kind of flat last time I checked. Yeah, HUL is down 4%. We've got Mangalam joining in with the fine print. Mangalam, we weren't ever going in with very tall expectations to begin with, but let's start with Lever. Why is the street so disappointed?
Well, so for Lever, if you look at the numbers, they're largely in line with muted expectations with a few bright spots, but a couple of near-term concerns, and that explains why the stock is lower today. The bright spots was that the volume growth came in at 2% versus expectations of 0 to 1%. At the same time, the revenue came in largely in line with expectations, as did the EBITDA and the net profit. But the near-term concern is give and take everything. The volume growth is still 2%. The revenue growth is still about 2%. And at the same time, the management has lowered their margin guidance from 23 to 24% to 22 to 23% for the next few quarters. And this is not because of, any sort of commodity pressures, but they are looking to deliver the right price value proposition. So which basically implies to pump prime volume growth, they will be compromising on the margins by about 100 basis points itself on the EBITDA front. However, the bright spot is that the company believes that growth will gradually improve going forward. In fact, the first half of this financial year itself, they will do a lot better than what they did in the second half of the last financial year, which basically implies that the second half of this financial year will be a lot better than the first half itself, because that's the nature of FMCG. So from going forward, one can expect mid-single digit volume growth and low single digit price growth. That implies nearly high single digit revenue growth, even if that comes at the cost of slightly lower margins. So that is something which is important. Additionally, the management press meet, there were a couple of notes that I took away from. One, there is strong growth on their foods business. As far as their plan is concerned, Boost is one of the brands that they are looking to grow. Sunscreen is another category which is growing at 30 to 40%. Penetration is just about 3%. And they are scaling their acquisitions. Zoziva, for instance, when they acquired, was a 100 crore business. Now it's a 400 crore business. Similar is the kind of growth that they expect from Minimalist as well. So near-term margin-related concerns, growth-related concerns are keeping the stock under pressure. But we will monitor how growth pans out in the next few quarters. As far as Nestle is concerned, out here the muted top line and operational resilience is something that really stands out. If you look at the revenue, 5,500 crores, the street was working with 530 crores. But despite that, the EBITDA came in at around 1390 crores as against expectations of 1350 crores. Net profit closer to 885 crores itself. Here too, the domestic volumes grew by 2%. Gross margins compressed a lot less than feared, and other expenses were managed to ensure that the margins were better than street expectations. They did see good growth coming by in their beverages and confectionery business. Even their pet care business, which they acquired from the Nestle parent, has grown in high double digits rather, which is the highest that they've seen. What's not good is that domestic sales have grown at just around 4%. The street was working with 5 to 6% growth, and commodity inflation is still sticky when it comes to coffee, cocoa, and milk. So those are some things that we'll keep an eye out on going forward for Nestle.
Right. Mangalam, thank you very much for that. So that's a roundup of the FMCG numbers that we've gotten today. Pramod Gubbi is now with us, co-founder of Marcellus Investment Managers. Pramod, good to have you back on the show. I think even from the last time that we spoke, and private financials is an area that you've been kind of positive on, and you found value whereas other sectors, not so much, and the space has done well finally, waking up. But again, stocks have, of course, come up nicely from lows. What's your sense, Pramod? Is the environment conducive enough? Because there's enough liquidity. The problem seems to be demand for credit. That's got to pick up, right? And maybe easier liquidity over a sustained period of time will kickstart that. But what's your view and what do you like here?
Yeah, we still remain positive on private sector financials, but after the recent underperformance, you cannot say that valuations are compelling anymore. At best, they're reasonable and fair. Certainly compared to other segments of the market, they still seem relatively valued. That's as far as the valuations are concerned. But of course, on the other aspects, there's still headwinds. Clearly, you talked about credit growth. The demand environment in the country is sort of muted. We've seen the public capex slow down. Perhaps there could be further slowdown given the tax collections haven't been in line with expectation, and the government has reiterated its intention to be tight on the fiscal front. Private sector capex has also remained.
We have a bit of a problem with that line. We'll try and get him back up in just a bit. But yeah, as a house, Marcellus has taken a favorable view on financials, especially private financials. And they're also selectively constructive on pharma, particularly healthcare, from what I recall from the last conversation. So we'll go back to Pramod in just a bit and try and get... I think we, in fact, have Pramod back. So Pramod, yeah, please continue. We lost you there. You were making a overall point on the market construct now.
Yeah, so as far as
Oops, not lucky with the internet line, I think. So we're going to try and do that again. By the way, the market's now turning into a slightly deeper shade of red. Not too bad. It's still 100 points on the Nifty. After a big rally, it doesn't quite matter, but there is some additional pressure. Let's see which are the stocks that are seeing that incremental pressure. SBI Life, which is reporting numbers today, is about 0.5% lower. IndusInd Bank, this sharp 4% run. Now it has been trimmed to a 3% run, slightly off the highs on IndusInd Bank as well. And there's some incremental profit taking on Bajaj Auto, Eicher Motors. These are some of the stocks which are under pressure. By the way, Bharti Airtel, after lever, Bharti is the second biggest loser this afternoon on the Nifty, down about 2%. Like I've been saying, US futures, just going back and checking that, US futures are down about 1% or so at this point in time. So I guess last couple of days were a lot of excitement, thinking that there's de-escalation, and at least now Jerome Powell is not getting fired. So you run in relief on that. But then again, like we were discussing this morning with the city guest, Drew, right?
Yeah.
Those deals are happening. First, they're going to take time. Let's see when they happen. And whatever shape and form they take, in all probability, with big markets like China, the tariff is going to be northwards of 10%. Which still 10. Means it's
north of, I think, north of that.
10% is 145%.
So. Could be 30, 40, but still much higher than any time in the past. Laurus Laboratories numbers are at the bottom of the screen, and these numbers, I don't know if there are estimates. Oh, that is an estimate actually. 185 is the estimate, 230 is the actual PAT number. That's a very good number. And the top line also seems to be coming in, 1720 crores. Is the top line, and I think there is a bit of a beat there as well. So this is a decent set. coming through from Laurus Labs at this point in time. We'll sort of look at, we'll have the margin number, etc. as well put out. A lot of interest around this one as a turnaround story or whatever you want to call it. I mean, the stock's done well actually over the last many months. EBITDA at about 420 crores coming through. So more numbers as we speak at this point. So Vinny should be able to help us out with more if there's a guidance, etc. as well. 24.5% is the margin compared to a poll of 24%, which is largely in line with expectations.
So the margins have come in at this 24% mark for the first time, I think, in the last 2 years or so. So that was the expectation. It appears it's met those expectations. We got used to hearing, Laurus, that the next quarter will be at those levels of 24%. But this time around, it's 24%. The last time, if I'm checking this correctly, yes, the last time they came out with these sort of margins was all the way back in December 2022. So there is a visible improvement out there. From those mid-teens, the margins moved to around 20% and now holding at around 24.5%. Wait for the commentary though. I
remember we pressed Dr. Chava quite a bit on margins and top line as well. Top line, I don't think they gave out a guidance per se. From what I remember, back in, I think it was a 20% odd number, which was put out for top line as well. But we'll have to kind of sort of check. But these are a recent set of numbers coming through from Laurus. So, you know, from the lows over the last few quarters, people have made a lot of money on this one as well. Let's wait for Vinny to come back with more details. But we have the persistent systems numbers as well, which came in. Strong said, we spoke with the management earlier on, and this is what they told us. Listen in.
So if you look at the margin performance, we have been saying we have invested ahead of the curve in sales and marketing. So if you look at our sales and marketing headcount, even over the last 4 quarters, it's in a very narrow band. While we have delivered in excess of $225 million or thereabouts in incremental revenue over the year. So that gives us a SG&A leverage. If you look at our utilization, we started the year with 81-82% utilization. We ended the year with 88% utilization. So there's a significant amount of utilization. And that utilization, please keep in mind, there are not too many companies that are growing. A lot of companies are degrowing. They are in fact reducing headcount, whereas we are one of the few companies that are growing, adding headcount. Even in this quarter, if you look at it, we added more than 600 plus team members globally. So if you look at whether it is the revenue growth that gives you a leverage overall over many different costs, sales and marketing leverage, whether you look at the forex side of it, whether you look at utilization, every part of our business is kind of kicking in high gear. COVID year, everyone in our industry degrew. We grew by 12.9%. Our CAGR, compounded annual growth rate, is upwards of 24% for the last 4 years, compared to the industry at less than 8%, maybe in the range of 6%. So if you look at it, we have delivered 20 sequential quarters of healthy growth. That's point one. Point two, if you look at $375 million plus that we have delivered, $375.2 million, you multiply that by 4, it is $1.5 billion plus. That is the starting entry point for the year. And we have 2 years to go from $1.5 billion to $2 billion and then build up from there. Now have a good capital allocation for acquisitions. And we will look at maybe a scaled acquisition in Europe, tuck-in acquisitions in the US to build capability, and horizontal use cases in Gen AI like we did in contact center with the Starfish acquisition that we did.
Okay, that's persistent, and the company's done well in the quarter gone by in terms of growth. So has the stock. Let's go back to Pramod. We have him on a phone line now because of those internet issues. Pramod, very quickly, so I want to sort of throw 2 sectors at you, both that you like. You were just completing that point on financials, so please do finish that. And consumer. What part of consumer are you still convinced on? Because growth seems to be missing from most parts of it, unless you look at discretionary, like, let's say, some, jewelry companies, etc. So what in consumer and what in financials?
Yeah, sorry about the connection earlier. On financials, I think the biggest advantage is still the valuations relative to the rest of the market, although it's not as compelling as it was, say, 3 months ago, given the recent outperformance. It's still reasonable. There are headwinds in terms of credit growth, potentially in some pockets, asset quality deteriorating as a result of overall economic weakness. But even factoring that, I reckon it still remains one of the reasonable pockets of value in the market. As far as consumer is concerned, we've been talking about the crunch in the middle class consumption, particularly in urban consumption. That's clearly showing up in sectors, as you saw with the FMCG results earlier today as well. So to the extent that it'll take a while for middle class balance sheets to get repaired and they start spending again, I reckon the recovery in at least discretionary consumption is a while away. Possibly, rural is looking better given we've had welfare spends, we've had decent monsoons, food prices have come off, and food prices coming off is a big deal for the bottom of the pyramid consumer. To that extent, we might see some consumption picking there. But overall, from a valuation perspective, given still subpar growth compared to history, valuations don't merit an aggressive stance in consumer either. But that's the case with most of the market. I think valuations have structurally re-rated in the country, possibly due to the increase in financialization of savings, which is reflected in the sort of flows that we're seeing in these markets into mutual funds. Now, when that will abate is anybody's question. My sense is, given the opportunity... Yeah, sorry, go ahead.
Yeah, sorry. I mean, just to comment on there, I heard what you said about consumer. Does this mean that you have trimmed exposure to some of the companies that were earlier in the portfolio? Have you kind of downgraded the sector? Because what you're saying is what makes perfect sense, that growth is still a while away and valuations in that context perhaps are still expensive.
Yeah, so I mean, we've never done top-down allocation in our portfolios. It's always been bottom-up stocks. And in these sort of markets, it's actually good for bottom-up because the markets tend to be less discerning in a sell-off mode. To that extent, better businesses also get sold off and are available at reasonable valuations, at least relative to the market. Our portfolio construction is more from a bottom-up perspective. To that extent, we still do hold consumer names, but you're right, in terms of allocations, they have reduced compared to, say, 3 to 6 months ago.
Pramod, we'll leave it there. Thank you very much for joining us. And hopefully next time on a better line. Today, we do not have that. Thank you once again. What we'll do is we'll take a quick commercial break here. What's happening in dealing rooms with D Street Chatter? Nimesh gets us that intel in a bit. And of course, our technical experts with their trades as well. Stay tuned.
Welcome back. Well, the markets have slipped a little bit, namely the Nifty Bank. Not the Nifty so much. The Nifty Bank is now down close to around 200 points or thereabouts. That's been the outperforming index for this series. But expiry final hour sometimes swings it all over the place. So that's precisely what's happening. For the time being, let's hop across to Nimesh. He's here to tell us what he's picking up on D Street Chatter. Nimesh?
Hi, Nigel. Given the expiry day, it's relatively a quieter day. It's been very range-bound day of trade. Not much in terms of big, wild moves, so to speak. I think it's the FMCG which is dragging the Nifty down because of the HUL results and the commentary. But largely from a flow perspective, for the second day running, I understand there is a basket buying, MOC basket buying at a leading FID. So maybe last 30 minutes is because of that you might see some action in individual names. Again, from a sector perspective, from a flow perspective, it's largely the private banks which continue to be well bid. So most private banks is something where there is a bit of buying interest. and that index has relatively outperformed this month, and so to speak, this in today's market as well. Clearly, from a new series point of view, I guess the earnings are going to be a big dominating factor, and of course the MSCI review in mid-May will be important for some individual names. But from a flow perspective, there is buying, and there is buying into private bank stocks.
Nimish, with individual names, I mean, lots of success recently.
Well,
Sami was the latest one.
Prashant, that just adds to more pressure, right? So it's always challenging. But anyway, in terms of individual names, the first stock on my list today is Whirlpool of India. A big move in that name. Need to see as to what comes out. But again, we all know it's an open secret that the parent wants to sell or bring down the stake from 51 to 20%. I understand the bankers have been appointed for the same. The excitement on the stock could be because the buzz is that maybe there are 3 or 4 large buyers, or maybe even an individual buyer, a single strategic buyer who can look at this particular stake. So maybe that's the reason why you've seen a big move in that stock. If indeed there is a single buyer or a clutch of buyers, the supply overhang will be out of the way. So maybe that's the reason why Street got excited on Whirlpool today. So that's the first stock. Second stock is Apollo Tyres. That's been consolidating in a narrow range of late, but it's up to 1%. The volumes have picked up as well, and the Street is anticipating a corporate development in Apollo Tyres very soon. What I hear is potentially a restructuring or something on those lines of their European businesses. So that's the trigger for Apollo Tyres. The third stock is Suven Life. Again, quite that stock has moved up from the recent lows of 100 to back to 140 odd levels. It's buzzing in trade today as well. Understand the company is likely to raise funds, mostly by a preferential issue very soon. So that's a trigger there in Suven Life. And the last stock is ITC. The delivery-based buying has started in ITC in the last couple of days, and I understand a leading domestic mutual fund has been aggressively buying into ITC in the last couple of days.
Nimish, with Whirlpool, just to kind of revisit, typically when there is a large stake sale, stock goes down. Here, stock's up 6-7%, and that could be, as you said, because there could be it may not come to the market. It could be a strategic player who could be interested. But this is very early stages, right? I mean, they're still scouting in that sense, just to be clear.
It's early stages, Prashant. I know for sure that the banker has been appointed and they've started the process. The feedback is, at least the market is anticipating, maybe there are a couple of big players, PE players who may just look to buy this entire 30% stake, if indeed they are selling the entire 30% from 51 to 20. And the other buzz is that maybe one single strategic investor could buy out that entire stake.
And just on the valuation parameter, the stock had come down to around 25-26 times. Traditionally, Whirlpool used to trade at around 45 times on an average for the last 10 years or so. And just one more observation, in their presentation, this time around, they were talking about going ahead with that stake sale, but they've removed, earlier I think they were written $550 to $600 million. So that wasn't there as well. On our, on our segment Midcap Microscope, I explained the company at around, less than 1,000 rupees or thereabouts, because the question was how much of the bad news is in the price. So today's con call, which is at 5:30 p.m. India time, will hopefully give some more details.
Absolutely, and we'll track that. Nimish, thanks very much for that. So keep an eye. ITC, there was Apollo Tyres, and there's Whirlpool as well. 3 names. Well, let's quickly run you through what to buy or sell today for a reverse trade as we come back tomorrow. Mitesh is with us. Mitesh, what do you have?
Prashant, I think, despite the fact that the markets have been slightly negative, I will go with positive recommendations. SBI card is after 3-4 days of consolidation is near the day's high. So keep a very tight stop at 918. Look for a 940, 945 kind of a target for tomorrow. And the other stock which I like is something which I recommended earlier, but as a VTST trade, Sun Pharma can still be a good trade. Sun Pharma is a BTST with a stop at 1794 for targets of 1820.
Okay. All right. Got it, Mitesh. Thank you very much for joining in, giving us all the stock advice through the course of the day today. Thanks very much. We'll see you tomorrow. Let's put the spotlight on earnings. Lots of big companies are slated to report after market hours. Let's go across to Abhishek first to talk about the expectations from Axis Bank. Abhishek.
Well, the NII growth rate on a YY basis can be one of the lowest that you are seeing in the last 28 quarters or 7 years. That is what analysts on street estimate. So the key things to watch is that the sequential, that is quarter-on-quarter business growth can be pretty strong. Deposit growth as per Citi estimate is about 7% sequentially, and loan growth as per Citi estimate is about 5% sequentially. So net interest margin may decline YOY and quarter-on-quarter. Kotak Securities estimates 20 basis point decline YOY in net interest margin and 15 basis point decline on a sequential basis. So watch out for the slippages factor and the loan growth factor, which can actually impact the net interest margin. Now, provisions expected to decline sequentially, that is quarter-on-quarter. Kotak Securities estimates more than 27% decline in credit cost or loan loss provisions. So slippage is also expected to decline sequentially. Kotak Securities estimates a slippage of 5,000 crore versus more than 5,400 crore in the previous quarter. Asset quality expected to improve. Now, Citi estimates gross NPA and net NPA ratio to decline by almost 10 basis points. So they estimate gross NPA ratio to come at 1.4% and net NPA ratio at 0.3%. Watch out for the near-term loan growth target and the business momentum guidance from the management. So our poll suggests NII growth of 5.4% on a YY basis and about 1.5% on a sequential basis. We are working with a profit decline of more than 5% YY, but profit can grow by 7% on a sequential, that is quarter-on-quarter basis. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. That's going to be a number that we'll be tracking. Well, Amrish Palika joins us to help us out with a couple of ideas. Amrish, before we ask you about a couple of companies, you normally give us that one stock that you're quite positive on. Which one is it this time around?
Nigel, it's JSW Infra, which is the second largest private commercial port operator in India, with a capacity of about 174 million tons per annum. It operates about 10 ports, both East and West Coast, have a liquid storage terminal in UAE, and they've been growing organically, but also doing strategic expansions and acquisitions. In fact, last year they bought out Navka Corporation as a listed company, and now its subsidiary JSW Port Logistics is undertaking about a 9,000 crore capex, which should be done by about 2030. Expansions are happening across various ports, and now we have seen 5 new ports and terminals being signed up. So this should also turn into revenue over the next couple of years. So JSW's target capacity by 2030 is about 400 million tons, which is about 2.5 times current capacity. So I think we should see a huge growth in the third-party volumes. My target price is about 400, based on FY27 EPS of about rupees 10.
Okay, Amrish, hi, good to have you on. That's one of the picks. Do want to talk to you about some of the IT earnings that have come in, Persistent in particular, because Persistent has persistently been delivering fairly steady performance, even in a challenging environment. But then the stock has also it's done much better than a lot of the others. What's your view now?
No, like you said, it's been quite consistent. Like a level like this possibly could be bought because, again, we are seeing, as far as software and IT is concerned, overall, at least the sentiment is improving to a certain extent compared to what we have seen in the last 2 to 3 weeks when it was down the dumps. So I think at the current levels, it could be bought. I think we should again see those levels which we had seen in the recent past of about 6,200 to 6,500. I think those levels should be reached in about 6 to 8 months.
Okay, that's Persistent. By the way, since we're on the subject, let's quickly run through some of the expectations from Tech Mahindra. There's also L&T Tech that's reporting numbers today. For Tech Mahindra, like a lot of its other larger peers, the expectation is the top line is going to fall. Dollar revenue is expected to decline 0.9%. That's the overall broader expectations that's come through. The margin should hopefully be steady. That's the sense. Rima's poll is saying the margin is going to be at about 10.3%, virtually unchanged quarter on quarter. Last time it was 10.2, this time 10.3. So let's see if they can deliver along these lines. Amrish, large cap IT, buying anything?
Yeah, in fact, I had stopped buying in between, but then in the last 4-5 days, we again started buying into IT. So I've been buying Infosys, bought HCL Tech, in fact, post earnings, TCS. I think these are the couple of them which were bought in the large cap ones, because most of the bad news seems to be priced in. I mean, it's possible that they may not go anywhere for the next couple of months, but then from a valuation perspective, looking at longer term, 12 to 15 months plus, I think it's a great time to buy.
Okay, all right. Amrish, stay with us and you may want to listen to the next one. This is a CNBC Awaaz exclusive. Sources are telling CNBC Awaaz that Airtel is seeking to convert spectrum dues to equity. And Asim is now joining in with what the story is about and what he's picking up. Asim, over to you.
As you know, that recently government has come up with their policy where the government has allowed telecom companies to convert their dues into the equity. Vodafone Idea has already availed this policy and converted its due into the equity. 36,000 crore worth of spectrum dues have been converted into the equity. Now, what we are learning from our sources that Bharti Airtel is also seeking a parity on the same ground. Bharti Airtel has also written to the Department of Telecom for seeking a conversion of dues into the equity. When we tried to reach the Airtel declined to comment on this issue. However, when we tried to reach the Department of Telecom, they have said this policy is open to all. Anybody can apply on this ground, and this policy is open to all, but we will decide on the case-to-case basis. So far, government has not taken any decision on the same, but however, Airtel has demanded for it, and government may soon take a decision or a final call on the same.
The entire dues, Asim, or the entire spectrum dues to be converted. So government will hold equity then to that extent. And Bharti, that's what you're picking up, right?
The government, it depends upon the Airtel how much dues they want to convert. As far as I know, that they have around 52,000 crore rupees worth dues for their long-term spectrum liability. So they wanted to convert that into the equity portion. So they have asked for Department of Telecom. So Department of Telecom now has to take a final call in that whether they will be agreed to the Airtel demands or not. So the final ball is on the government court. I have spoken to some senior official and they said it's on our discretion that whether we will allow this or whether we won't allow this. But they have demanded from the same.
Around 50,000 crores, Asim, right? You're saying that Airtel may want to convert 50,000 crores into equity.
The long-term liability worth through the spectrum is around 52,000 crores and they wanted to convert it.
Okay, all right, got it. Thank you very much. Interesting development there. Let's see where this really goes. Bharti Airtel anyway has been down about 2% in today's trading action. We'll take a break, come back and we'll get you more on the markets in just a bit.
How do you create a moat around yourself? How are you different?
So I remember in 2002 or 3, I opened my Demat account. And the person did not even kind of entertain me. So I went chappal and as a student you go there and come to and so on. And then after conviction, after some convincing, filled the form, 2 days, 3 days, and opened my account. By the time you're gone, your interest is lost.
Yeah.
So the point was you find one problem area at a time and then kind of figure out that you have this right to win in this market.
What your data is telling you at this point in time about the investing culture?
Mutual fund used to be very low, by the way, in low single digits. And now it is at high single digits. Stocks used to be high single digit and it's slightly higher single digit.
Yeah.
Indian middle class, very large, and we are at around the 70-80 million mark.
What are the top 3 things that you will never do?
We will not do e-commerce, unregulated products. We will not do anything which is not good for the customer.
Welcome back. 6 minutes to close the day. We've got Amrish with us. Amrish, just wanted to get your thoughts on the story that our colleague from Awaaz just reported on. This is sort of a departure from earlier thought. Now, like Vodafone, even Airtel is saying, we also want to convert some of our dues into equity. Your thoughts on what this would mean?
But then I don't think we can compare Vodafone with Bharti Airtel. I mean, they have prepaid 5,000 crores earlier as far as spectrum dues are concerned. So it's not that Bharti does not have cash to pay. It's just that the cash they have or they're generating could be put to better use. So this will work out about, I think, 52,000 crores, which will work out about 5% of the equity. I think from a government's perspective, I think it'll be a good hedge against the Vodafone Idea investment. I mean, if that goes down or under, you have Bharti doing well at that point of time.
Interesting. Amrish, want to ask you about a few more stocks. We have Asian Paints. That stock, over the last few days has been some kind of delivery-based buying. From the paint stocks, what do you like?
In fact, Asian Paints has been one of my top picks. I mean, even before it fell. So when it fell, we averaged out decently well. Knowing fully well that it'll take a while for this stock to bounce back. But then we still have a price target of about 3,400 to 3,600. So at the current levels, if one does not have, I think it's still a great time to buy. Because I think most of the bad news is already priced in as far as the competition is concerned. And even now, if you see, they've again aggressively started marketing themselves. So I think, over the next 6 to 8 months, we should see a decent bounce back in the stock.
Amrish, iShares has not really corrected that much. High was about 59. Recent high was 5,900. It's come off a little bit now, but I mean, hardly anything. You think it on these Harley fears, etc., it corrects a little bit more, becomes a good buying opportunity? It's not given a buying opportunity in a while. It's one of the foremost plays on discretionary consumption in that sense.
Absolutely. And again, whatever said and done, it's in a niche category. Although you may say that Harley is there, which could be a decent competition, but they're still in a niche category. So in case we see some correction in this stock because of the market, maybe at levels of closer to about 4,800, 4,900, I think it becomes a decent buy at those levels.
One thing I've seen with Eicher Motors, the launches come and go, but the thump has a different feeling when you ride it, and for a shareholder as well, I guess it feels quite good because you see a lot of launches, you see the stock pull back, but ultimately, you get 350, 500, 650 cc at affordable rates, and the parts as well, you get it fairly well,
Actually,
available.
It fell to $5,000.
I think when Bajaj and Hero had launched it, I remember it fell more than 15%.
The war of the big bikes, remember? We did so many conversations around that, yeah.
So low on the 7th of April was $5,000. I mean, it was $5,000. And of course, it's come up about 10% or so. It's otherwise it's kind of been steadily doing very, very well over a period of time. Blue Star is another one, right? I mean, we had that one day, those BI standards it was, right? I mean, 2 days, the day before yesterday, the stocks saw a bit of a pop, but yesterday stocks were down sharply. Today again, and I think Blue Star and Voltas both. Any thoughts here, Amrish?
In fact, instead of Blue Star, I would still prefer Voltas, which has more of B2C share. So I think it's again followed decently well from the recent moves which we saw in the last 4 or 5 days. It's already fallen about, I think, 70, 80 rupees. Maximum, I don't see this like Voltas going below 1230, 1240 levels. So at the current levels, it should be bought. Looking at the scorching heat, clearly, I think it's time to have air conditioning and anything related to air cooling in the portfolio, and Voltas would be the first one.
Okay, all right, got that. Thanks very much, Amrish, for all the perspective. Just stay on, we'll take 2 minutes and recap the day, and then we'll come back to you. So the tally reads as follows. We've got about 81 points sort of a dip on the Nifty. The Midcap index is also subdued. And the Bank Nifty has again now turned. When we started the show, the Bank Nifty was flat, but now it's again down about 0.5%. So it does classify as a slightly weak day for the large caps. Let's talk about the key pain points then. Bottom of the barrel was HUL after its numbers, 4% lower. Bharti Airtel 2% down. Interesting story that you just heard. The company could look at converting some or all of its spectrum dues into equity. At least that's what it wants. Eicher Motors down 1.5%. Then the banks, they couldn't really hold up today. So ICICI Bank is ending with a cut of 1.5%. HDFC Bank is down about 0.5%. Let's see Axis Bank, which reports numbers after the bell. Axis is at the flat line, not too much happening out there. Other weak names included ONGC, Eternal, auto stocks like Bajaj Auto and M&M also cooled off to quite an extent. On the upside, IndusInd Bank has been an outlier, about 3% up on that stock. Ultratech, Grasim moving higher, and Pharma has had a good session today. Cipla, Dr. Reddy's, Sun Pharma, all these stocks on the upside. Even Apollo Hospitals from the healthcare space, about 0.5% up, 85 lower on the Nifty, Nigel.
Well, that's right. A lot of stocks in the broader markets, though, were moving around. You had Morpin Laboratories up 14%. MMTC was up 10%. You had Inox Wind, that was up another 4.5%. And RBL Bank, 200 rupees now on that particular name. What came in for some mild profit?